Many thanks for joining us. This is Business Incorporated on Channels Television. I am BC Adebayo. Coming up, CBN Governor Godwin Emefiele unveils monetary policy framework for the next 5 years. The Airtel Africa opens $750 million global IPO today in London. And South African pay TV firm MultiChoice Group to cut about 2,000 jobs in customer care service. Let's begin with intraday numbers coming from the African stock market, starting from Nigeria, where the all-share index managed to eke out a 0.03% increase in the main index as at midday. But it's looking like a negative start to the week in South Africa, where the JSE index was 0.51% lower as at intraday. It's the same story in Egypt, with a 0.72% loss seen at intraday. The Kenyan Bourse closed 0.16% negative on Friday. And in the Middle East is a mixed bag of numbers coming from the markets with track. Now, the Abu Dhabi index was up 0.53% at intraday, lifted by a 1.6% gain in Alder Properties and a 0.3% rise in First Abu Dhabi Bank, which is the UAE's largest lender. In Dubai, the index was unchanged as at intraday. Qatar's index edged down 0.44%, with the market's heavyweight lenders slipping 0.7% and commercial banks shedding 1.2%. Saudi Arabia's stock market was heading towards a fourth straight day of decline as geopolitical concerns in the Gulf region weighed. The index fell 1.55%, with nearly all its banks slipping. Well, let's head to the European markets, where stocks were mixed early today as Middle East tensions linger. Daimler's profit warning also impacted the markets, sending autos down 1.5%. And for more from the European space, Ashutosh Pandey joins us from the Frankfurt Stock Exchange. It's good to see you, Ashutosh. Now, German automaker Daimler has lowered its profit forecast for the year, setting aside more money to deal with the fallout of the diesel scandal. How are investors reacting to the profit warning? It's not really a surprise after all, or is it?
Well, basically, yes. I mean, it's not much of a surprise, but in the share market has reacted negatively to this story. The stock is down almost 5% and making it the biggest loser on DAX 30 in Germany. Now, why I say it's not major surprise, because while the quantum, the size of the guidance cut can be a surprise, but not exactly the announcement per se, because the company has been facing investigations in US and in Europe related to diesel scandal. Just on Saturday, the German Transport Ministry ordered the company to recall 60,000 diesel vehicles, and it has said that it is going to expand its investigations to include more models. So that's one thing. The other was in April. That's when the European Union charged companies like Daimler and its German peers, Volkswagen and BMW, for colluding in delaying the rollout of greener technologies. And back then, Daimler said that it did not expect any fine, but BMW, its peer, did keep aside 1 billion euros for eventual fines from that.
The third profit warning in a year. Are we likely to see any more this year?
This is very difficult to say. You can't really predict the financial fallout of the diesel scandal. And add to that, there are other uncertainties as well. I mean, we cannot say at this point of time how the entire US-China trade spat is going to pan out. That's going to have a major bearing, because China is a key market, and as well as the US, both are major trading partners for Germany. And also the market slowdown in China, and the auto sales, new auto sales have fallen for 11 months on the trot, and that's worrying for the industry here in Germany. And last but not the least is the eventual tariffs on European automakers. Remember, the US has postponed that decision by 6 months. Last month, they postponed it by around 6 months. So we could expect some decision on that later in this year, sorry.
Before I let you go, Ashutosh, let's talk about Germany's business confidence, which has fallen for the third straight month. Now, clearly, there are growing concerns in Europe's largest economy, right?
Clearly, and the reasons are not very different. I mean, apart from the Dieselgate, that's also contributing to to the pressure on the auto sector as well as the trade dispute between the US and China. Both are key markets for Germany, and that's the reason why the sentiment here is down. Manufacturing activity in the country has been in contraction territory according to Purchasing Managers Index. The auto sector, as I've just mentioned, is struggling. Now, for the first time in 5 years, we did see that unemployment rate go up last month, and that's also huge because earlier there was this thing that the unemployment was at record lows and wages were growing, and that could actually give some sort of a fillip to the economy. But it does not look like that anymore because as even the sentiments are showing, the hiring has taken a beating of late.
Well, thank you, Ashutosh. Jimmy should be back with you tomorrow. In the UK, retail store Boots is switching from plastic to paper bags beginning from today. Boots targets phasing out all plastic bags from its stores by 2020. Customers will be charged for the new bags. But Juliana Olayinka is waiting to tell us more about this and other major headlines coming from the UK. Juliana, it's good to be with you on the show. Now, health and beauty chain Boots has started replacing plastic bags with brown paper bags. But customers have to pay between 5 pence and 10 pence for these carrier bags. How will this move resonate with shoppers like you?
Well, Bissy, I think it will go down well with shoppers. It's certainly gone down well with me. Brits are becoming more savvy with regards to how much plastic we're using. In local coffee shops, people are even bringing in their own flasks and their own mugs. Reducing plastic waste is undoubtedly one of the most important issues around the world today, certainly in Western Europe and in America. And we're now used to being charged. Almost 4 years ago, the government here in the UK added 5 pence, which is the equivalent to about 27 naira, to every plastic bag used in large stores across the country. As the year before, in 2014, the number of single-use carrier bags handed out rose for the 5th year in a row to 7.6 billion, and that's the equivalent of 140 bags per person per day. Now, the government had hoped to see an 80% reduction in plastic bag use in supermarkets and a 50% fall on the high street. And according to official figures today, disposable carrier bag use has dropped by almost 86%. So Boots are bringing in this new charge of 5p to 10p, and they are hoping to scrap plastic bags altogether, as you said, in 2020. So if people don't like it, they'll just have to pop their goods in their own handbag, or, of course, as most people are doing in the UK, bringing in their own bags.
We'll see how that goes. Now, give us some hints about the Bloomberg Emerging and Frontier Markets Forum, which holds in London tomorrow. How big is this, and what's your outlook on those attending and speaking from Africa?
Well, I must say, Bissy, it's a big global business week across the world ahead of the G20 summit in Japan, which kicks off on Friday and is expected to be the backdrop for talks between the US and China. Yes, New Markets Media and Intelligence Initiated is coordinating Bloomberg's Emerging and Frontier Forum tomorrow. This will be hosted by Michael Bloomberg at the new Bloomberg HQ here in the capital. Now, Channels TV will be front and center with exclusive access and exclusive interviews all week. Now, as per usual, the forum will be facilitating one-on-one meetings between investors, companies and governments, and it will be interesting to see if Trump's trade sanctions or Brexit dominate discussions. However, running with the theme, emerging markets will be the forefront of deepened discussions. Now, confirmed speakers from the continent include finance ministers from Angola and Egypt. His Excellency Dr. Mahamudu Bawumia, the Vice President of Ghana, will be there, as long as the CEO of Botswana's stock exchange. And now they'll be joined by dozens of ministers, central bank governors, CEOs and heads of state.
We'll be looking forward to that. Now, track the trading day for us from the equity side to the currencies.
Well, at intraday, the all-share is up 2 points at 0.06%. The FTSE 100 also up at 0.05%, and the 250 is down by 0.03%. In currencies, sterling is performing well against the dollar and yen, up 0.06% on the dollar. A pound will get you $1.27. Down against the euro by 0.18%. A pound will get you €1.11, and up on the Japanese yen by 0.5%. 0.05%. Thank you, Bissy.
Thanks, Juliana. And staying with the markets, well, this time in Asia, where stocks were mixed today, while oil prices continue to rise as tensions between the U.S. and Iran lingered after the latter shut down an American surveillance drone. Mainline Chinese stocks were mixed on the day, with the Shanghai Composite up 0.21% to 3,008.15, while the Shenzhen Composite was fractionally lower at 1,576.09. Over in Hong Kong, the Hang Seng Index was about 0.1% higher as its final hour of trade, and Japan's Nikkei 225 finished its trading day 0.13% higher at 21,285.9, and the Topix Index gained 0.12%. In South Korea, the Kospi closed largely unchanged at 2,126.33. Australia's ASX 200 rose 0.22%, closing at 6,665.4. More numbers now from the U.S. stock index futures, which were slightly higher this morning as traders monitored geopolitical tensions, in particular between the United States and Iran. At around the early trade, the Dow futures rose 64 points, showing a positive open of more than 30 points. Futures on the S&P and Nasdaq were both seen marginally higher. Investors are following developments in the trade war between the U.S. and China, after the Chinese government said it would like Washington to stop inappropriate action against Chinese firms. However, market players are also heavily focused on geopolitics and in the escalating tensions between Iran and the U.S. On the data front now, the calendar is thin, with Dallas Fed manufacturing data due later today. Well, there are no major corporate earnings to note. Away from the markets now, the $750 million global initial share offering by Airtel Africa begins today in London as the Pan-African telco floats its entire continental operations via an unprecedented market sale. The IPO, offered through a book-building process, will see price determination discovery at the end of the exercise on Friday. Airtel Africa plans to use the share proceeds to reduce the company's loan book and shore up the balance sheet. The company is expected to be admitted to the premium listing segment of the main board of the London Stock Exchange at the end of the transaction. A Nigerian offer of the mega issue is open at an offer price expected between 363 and 454 naira per share, which will be followed with a secondary market listing on the Nigerian Stock Exchange. Oh, it's not so good news, as about 2,000 staff of South African pay television firm MultiChoice Group may be losing their jobs as the company announces plans to shake up its customer care service. MultiChoice confirms in a statement that about 2,194 positions will be cut in its South African customer care call centers and walk-in centers. The company says this became necessary due to a steady decline in the number of customer telephone calls and emails into its call centers and walk-ins in the last 3 years. Self-service digital now accounts for 70% of all its customer service contacts. MultiChoice announcement comes just a few days after South African President Cyril Ramaphosa described the unemployment rate among the youth as a national crisis. But the company says it will make new roles available for multi-skilled workers with expertise, skills, and technological know-how to enhance customer experience. While small South African lender African Bank has announced plans to launch an overdraft facility and expand its insurance business as it struggles to stage a comeback after a decline in its customer base. The new account, called My World, will be launched in 2020. My World has accumulated 20,000 customers so far. The lender was the first to be placed under South African Reserve Bank curatorship in over a decade after nearly collapsing under the weight of bad loans in 2014. Its customer numbers have fallen from 1.25 million in 2016 to 1.04 million in March 2019, and that's far from its 2.5 million goal. The bank's chief finance officer hopes that this new facility will halt the loss of customers. Still to come on the program, the CBN governor unveils monetary policy framework for the next 5 years. You stay with us.